Good evening, everyone, and welcome to Deloitte's analysis of the budget proposals 2026. Now, today, the President, in his capacity as the Minister of Finance, presented to Parliament the 80th budget proposals of independent Sri Lanka. And we are here to dive into it, discuss it, analyze it. And we're going to do that with an eminent panel of speakers, both from the industry, the private sector, as well as the policymaker. And we will give you an opportunity as part of the audience to direct any questions that you may have on these proposals at the end of the session. You can type in your questions in the chat box. Now, before we move on to introducing the panel today, I'd like to just start off things by giving a brief overview of the fiscal as well as the non-fiscal proposals in the budget today. Now, this is just to set the context. Obviously, we won't have time to go through each and every proposal. I will be only concentrating on the salient features. So, to begin with, we'll start off with the tax proposals. Now, moving into the budget, at various discussion forums, we were assured that there will be no new taxes in this budget. And that has been the case. There has been no new taxes that has been introduced, only a change to the existing taxes or tax structures to sort of, I suppose, broad base and expand the tax base. So let's take a look at what of these changes are very quickly. To begin with, we have a reduction in the thresholds of both VAT and SSCL. Again, this is in keeping with the government's aim to expand the tax net. So the previous threshold of 60 million per 12-month period has now been reduced to 36 million for both VAT and SSCL. And that will be effective 1st April 2026. So obviously, the expectation is that we generate a little bit more taxes by this proposal. Now, here we have a change in the para-tariff structure. So if I just give a little bit of a background to this, I think it was also part of the IMF study and IMF recommendation that we move out of the imposition of discretionary taxes, taxes that can be changed as and when needed by the policymaker overnight, to move out of discretionary taxes, and that also translates to removing the para-tariffs as we move along. And the government had given an assurance even in the previous budget that this would be phased out along the way. And there were certain steps taken towards this, and this is one of the steps. Import of palm oil and coconut oil was liable to a special commodity levy at the point of import. Upon payment of this special commodity levy, the VAT and the SSCA was not applicable at the time of import. Now, on the other hand, locally produced coconut oil and palm oil are liable for VAT and SSCA. So this is twofold. So one is to bring both players to a level playing field, both the manufacturer and the importer, and also to take off these discretionary taxes and move out of the para-tariff system and, sort of let the market forces come into play. So effective 1st April 2026, the importation of coconut oil and palm oil will now be liable to VAT and SSCL on par with the local manufacturers. Same for fabric. So locally manufactured fabric is liable to VAT. But on importation, the VAT was exempt and instead a cess was charged. Now, going forward, April 2026, we will be removing the VAT and we will be removing, the cess, and the VAT will be imposed. Now, there's a change on the SSCL applicable on vehicles, of course, and always an interesting topic, taxes on motor vehicles. So again, to give a little context to this, currently, if excise duty is paid at the point of importation, the subsequent sale is exempt from SSCL. right? Social security levy. Now, there was a little confusion here on between the importers and those who are engaged in locally assembling vehicles. So those who are assembling vehicles locally had a situation where some of them paid excise duty on motor vehicle spare parts, and then they would calculate the excise duty on the total ex-factory price of the total value addition of the vehicle, whereas others weren't. So there was a discrepancy in how the various players within the industry was paying the excise duty. So there seems to be a proposal which now will clarify it and has basically said that moving forward, SSEL will be payable at the point of import on motor vehicles, as well as those who assemble and sell the vehicles. The subsequent sales will, of course, be exempt, but at the point of import, SSEL will be liable, and any motor vehicles which are locally assembled and sold will also be liable to SSEL. And this is to come into effect from 1st April 2026. Now, again, as part of this whole removal of para-tariffs and moving to a national tariff policy, they've made a change to the custom duty bands, the rates. So currently, we have a three-tiered three-rate band, which is 0, 15, and 20. Moving forward, effective 1st April 2026, there will be 4 rates, which is 0, 10, 20, and 30. So part of this is, of course, to compensate for the loss in revenue of the para-tariffs. That's why the 30% rate is there. And obviously, the 30% rate will be on those luxury items, which we consider as luxury currently. So there's a change in the duty rates. Again, effective 1st April 2026. And although not specifically mentioned, obviously the 30% rate will be applicable to motor vehicles as well. In the drive to broad-based tax, collect more taxes, meet our tax to GDP ratio of 15.2, 15.3 within the next year, there are certain policy framework amendments that had to be done, to sort of streamline the collection process, streamline the administration of taxes, so that we could get more people into the tax net. So some of these have been brought out. Some of these were mentioned in the previous budget. Now, a few more have been added on. So one is to have a modern tax audit framework where they will introduce a transparent risk-based assessment sort of procedure where there is limited interaction between the taxpayer and the tax officer, thereby reducing the room for any corruption. This would, of course, then encourage people who are outside the tax net, who are, afraid to come into the net because of various other malpractices in the past, will now be more encouraged to move in and be compliant. So there is a framework that will be put around this, and it will be a transparent risk assessment basis, which will be administered by the Risk Management Unit of the Inland Revenue Department. There's, of course, also a proposal to bring all the officers within one office complex, again, to make administration more easier for the taxpayer as well as the tax administrator. Now, there is some indication of a change to the Strategic Development Projects Act and the Port City Act. Again, just to give a little bit of a history and context to this, I'll start off with the Port City Act. The Port City Act was introduced with certain concessions, given to a primary business of strategic importance as well as a secondary business of strategic importance. Now, both these parties enjoyed very extensive tax holidays under the original scheme. Recently, the Gazette was issued, which amended the guidelines for these businesses of strategic importance in giving out these concessions. So the primary business of strategic importance, they would be continuing with certain tax holidays that they were given previously. But the secondary, the SBIs, the secondary businesses, the concessions that were given to them, or rather the exemptions that were given to them, have been withdrawn, and they have only been afforded a concessionary rate of tax. Now, these were guidelines issued by way of Gazette, but we were well aware that there would be some amendments to the Act which would then specify perhaps give or throw more light on the criteria that would be applicable. As you know, the Gazette didn't really bring out the criteria to qualify for these exemptions. So we anticipate that the amendment to the Act is to bring in that clarity. What is the criteria? And again, this is that shift that we see as recommended by IMF to move from discretionary-based things to a more rule-based approach. So, where they will clearly specify the rules to qualify for this exemption, so there is no room for any sort of malpractice or corruption. So we see that shift from the discretionary to a rule-based, both in terms of implementing the taxes and even in the policy, and that is what has been proposed here. So same goes to the Strategic Development Projects Act. They have said that they will amend it to bring in more rule-based clarity on how exemptions or concessions will be given going forward. There's an encouragement given here for the SMEs, where the policymaker is inviting SMEs to invest, and upon investment, you will be given certain tax concessions, not in the form of tax exemptions or lower tax rates, but in the form of enhanced capital allowance. So the policymaker is inviting you to invest and partake in the growth of the economy, and in return, they will give you relief in the form of enhanced capital allowance. So this was already there in the Act. The only thing that has happened is now that the thresholds have been reduced significantly. As you can see here, the previous threshold was 3 million. So the 3 million threshold has been brought down to $250,000 to encourage not only the big, large-scale investors, but also the small and medium-scale investors to partake in the growth of the country as we move forward. Now, this is just some data we got of the budget speech today. And just like to highlight a couple of things here, and there'll probably be a discussion around this, I'm sure. So as you can see, these are the revenue estimates for 24 and 25, and you can see the year-on-year increase. And as you can see, the biggest increase or the significant increase is mainly due to the import taxes on import of motor vehicles. So there's been a significant increase here. Now, if you move to the 2026 increase, you'll see that the year-on-year increase is fairly marginal. So, which means we anticipate it to remain the same or there's a slight increase. Okay. So this is taxes on goods. This figure captures the taxes on import of motor vehicles as well. Now, again, this is a very preliminary analysis that was done based on the figures that we have as of now. The contribution of taxes from the motor vehicle importation is approximately around 587 billion in 2025, approximately. Now, if we take that figure out from this figure, which the taxes on goods and services, which essentially captures both the customs duty and other taxes, other indirect taxes, you'll see that there is a negative increase. Now, as you know, there's a big debate on whether the motor vehicle demand will remain as it is. Will it reduce? By how much will it reduce? Will it be significant? Will it be a significant drop? So if you take it off completely, which will not, be the case, obviously, there is a significant drop. If you reduce it by, say, 60%, again, we see there is a marginal drop. So there may be a stress in terms of, a little bit of a stress in terms of making good this revenue that may be lost as a result of the reducing demand for the vehicles. But I'm sure there's also the expectation that by expanding the tax base and expanding the tax net, we are planning to increase the other taxes. As of now, the tax ratio of direct to indirect is 25 to 75%. Let me see. So the ratio is 25 to 75 as of now, as at 2025. In 2026, that ratio largely remains the same, slight change. But we are moving towards a 40-60 ratio as given in the budget proposals. And so perhaps there needs to be a re-look at the direct taxes. Maybe the expectation is that there'll be more people coming into the net and more compliance, and that will increase and tilt the ratio. And of course, when the taking of the para tariffs also will again have an impact on the ratio. Very quickly, I'll just go through some of the key non-fiscal proposals. I'm sure we'll be discussing a lot of it in the panel discussion. So there are proposals to create IT parks in terms of encouraging the IT sector growth. Then there are proposals to introduce a resident visa scheme to attract foreign investors here. Then we have concessionary loan schemes offered to SME sector. Then there is also a sort of a act to be, or a bill to be presented which will enable the government to create a company which will hold stakes in commercial enterprises, enhancing governance and accountability. Then if you move on to digitization, there is they propose to establish a virtual special economic zone, and so many other of these digital proposals, which actually started with the last budget and is now continuing. Especially you would see this unique digital identity, which was conceptualized last time and now may be first issued in 2026. So the first identity card to be issued in 2026. A lot of proposals for the development of tourism and sustainable inclusive development. I just mentioned this because I think our foreign workers are a big part of our economy. Their remittance play a big role here. So there is a proposal to include a housing scheme at concessionary rates of interest for them and establish a contributory pension fund. So there are, again, in terms of agriculture, energy sector, supply chain management, a lot of proposals to obviously grow those sectors, and with the ultimate aim of achieving our objectives, which is of course to achieve the tax to GDP ratio of 15%, and then have the full reform agenda for all the policy framework for all the sectors. So I conclude my very brief presentation with this, and I think we can now move to the panel discussion. So the panel discussion will be moderated by Shamindra Kulamanage. He's the editor of Echelon and the co-founder of Echelon Media Group. He will be moderating the session. He'll be asking questions from the panelists, as well as inviting other speakers to come and make their keynote presentation. So Shamindra, I'll hand over proceedings to you.
This evening. Our topic this evening is building a strong economy together, and I think we have the apt panel for that because it covers a wide range of both government and industry. We have policymakers, we have private sector, we have trade chambers, and of course we have experts from Deloitte, several experts from Deloitte also joining us. I'll try to do justice by quickly introducing the panel so that you have an idea of who's in front of you, and hopefully that'll make it possible for you to quickly frame questions. Also, we really do sincerely encourage you to put in your questions onto Zoom. There's a team here who's looking at it, and we will try to take as many of the audience questions as possible. So let me get to the panel, and I'll start. I'll quickly introduce them. In my extreme left is Hemantha Gunatilaka. Hemantha is the chief executive of NTB, or Nations Trust Bank. Besides him is Mangala Vijayasinghe. Mangala is the chairman of the Export Development Board. Next to me is Shayani Senimiratna. Shayani is representing a trade chamber in this instance. She's representing SLASCOM. SLASCOM is the ICT industry trade chamber. And on my right is Deputy Minister of Industry and Entrepreneurship Development, Chaturanga Abesinghe. Great to have you join us this evening, Chaturanga. Next to Chaturanga is Johan Lawrence. Johan is the Secretary General of JAF, the Joint Apparel Association Forum. So basically an industry body representing Sri Lanka's largest group of exporters, the apparel industry. Next to Johan is Charmaine, who you just heard. And besides Charmaine is Ruini Fernando. Ruini is from Deloitte, Sri Lanka. She's an expert in public-private partnerships, and she will talk to us about that later in the evening. So a wonderfully diverse panel. It's credit to Deloitte for bringing such diversity into one panel in one evening. And it's also a challenging conversation to sort of moderate because there's such a diversity of views. Again, encouraging you, now that you've seen the panel, you can see them all here, please do put your questions in. We are assuming you may have watched the budget this evening. Charmaine certainly took us through the tax proposals, and there were very few of them. Rather unusual for Sri Lankan budgets, but I think the industry and private sector have been asking for consistency, and then this is a sign of fantastic consistency. We are having continuity. Okay, we have two potential keynotes, and the first of those will be by the Deputy Minister, Minister Abesinghe. I will invite you, perhaps you can speak from where you are, yeah. Minister, to take some time, outline what you think are the policy prerogatives and how you think the budget meets Sri Lanka's aspirations. I mean, you've been fond of talking about thinking big, right? Yeah. Right? Okay. So talk to us about it.
Yeah, thanks, Shamil. I think thanks Deloitte for putting this just after the budget, and it's a very good time for all Sri Lankans and who are the investors out there to see what the budget entails. So firstly, I need to mention that this is probably the first year, the 2025, is where a government met all their financial and fiscal targets. Not only the fiscal targets, but also consistency in the external sector, stability in the interest rates, and also exchange rates, gave a certain level of stability coming out of the crisis. So the government's budget presentation, if you hear the president, it clearly mentioned we are moving from stability to predictability. I think you started by picking that up. What we want to now give is all the investors and the business community and the people a stable environment to do things, to make decisions. So the predictability will be the key theme of this budget. So basically, most of the decisions that's been incorporated are through policy deliberated decisions. So we wouldn't see a significant deviation from what we are proposing this year to the next 5 to 10 years. So that's the big piece of this budget. And also, this budget is also looking for a stronger growth. We are very clearly mentioning that we are looking for about a 7% growth in the next few years. And how do we set the stage for getting there? Because now we got our credit ratings up and the stability is achieved. What kind of reforms that could take Sri Lanka to the next level? So budget thematically looked at 6 areas. Now first is the sustainable growth. That is, we got a 4.6% growth, which we want to continue and better next year. And that to be sustained with ensuring the gains of that growth also gets spreaded across the community, and there's a fair distribution of the benefits of what we are doing as a country, and that there are certain reforms around that piece, and then there's a bigger focus on the export diversification. I think Mr. Mangala will talk more. Now, for us to move forward, our product diversification, the location diversification has to be strong. So innovation, product creation, value addition, and also the amount of funds, I think, triple to the Export Development Board to ensure that we will have that change taking place in 2026, which was not very much underfunded last year. And then the debt sustainability is a key area that we will have to clearly focus on, because we are just after a restructuring of our debt. And also government has been disciplined enough not to borrow from the market. And going forward, if we stick to the forecast, we would achieve a very strong debt sustainability by 2030. It was mentioned in the budget speech that we would reach about 87% of the GDP as our debt, which is quite significantly remarkable if we can achieve that, from being 116% of GDP to within 5 years come down to 87%. So that is also very much looked into. When we spend and when we invest, we need to ensure that we don't get into more trouble. And the other piece is the production economy piece. I think for the last 3 decades, there were not enough facilitation for production to take place when it compared to South Korea or India or Vietnam. So the policies that's required to ensure that we have a very strong production economy. I don't say that our economy will be predominantly production, but to have a strong production base, and also with value-added industries like IT and tourism and the blue economy to grow along with it. So to have that, there are a lot of reforms coming in for SME sector and investment promotion. And especially the tariff policy is going to make a big change, because at the moment, the intermediary goods and the raw material are taxed. So we are at a competitively disadvantaged stage, and then opening up the market for region is a big a step towards the bringing investments and single window investment. I think we have allocated about 2 billion, single window trade portal, and then getting a land bank ready for investments to ensure that the investments will come and pick a land, whether it's for energy, whether it's for tourism, whether it's for manufacturing. You have a readily available approved land so that you can start from day one. So I think the production economy piece is quite big, and a lot of reforms for SMEs. And then the fifth area is we have a 24% poverty problem, and the government will focus heavily at a regional level, rural level to elevate poverty. I think there are a lot of programs and a lot of structures that put in place, especially with the new government and the local authorities getting on board to do that, along with the huge investment in tertiary education and skilling as a source of poverty elevation as well. And then the digital economy has been our theme government had 3 themes when they came into power. One is Clean Sri Lanka, the digital economy, or digitization, and then the poverty elevation. So digitization, we've started the journey. There's a lot of investment put in this budget to ensure we get the infrastructure right, we get the reforms right, because we need venture capitalists to come in. We need certain reforms in the digital sector for the digital sector to grow. So we have proposed a venture fund by the government with a 1.5 billion rupees put into the digital fund for startups ecosystem, and then another 2 billion for the venture fund for industries, for SMEs, heavy investments in the R&D side. So I think the 6 themes are putting Sri Lanka into a growth trajectory. Apart from that, I think what we have established now is more transparency, good governance, and also a policy-driven country that we've shown during the year that it's possible. And if you have strong rules and governance and discipline, the corruption and all those things will not come into play. But the reality is that how fast we can bring technology. And I think there are mentioning about how we will manage SOEs. Probably we can talk in the discussion itself. But in general, this is what we want to do, give predictability. So the strongest workforce that will change this game is our state workforce. So they have been taken care of. There will be, the gaps will be filled so that the government functions to facilitate business will be stronger. So there's a lot of effort to build a strong government sector because we still have education, health, and transportation as key pillars of driving this country forward. So those three included, there will be a strong government sector, and I think the reforms or the recommendations to look at the vulnerability of the society is very much prominent in the budget. There's a whole page on the elephant man conflict. There's enough reforms coming into people with disabilities. There's enough reforms coming into housing problem that we have and then I think if you really look at, there's a 360 view has been taken, and if you really read through the lines, you would see most of the recommendations came from chambers and the investors and the public has been incorporated into this 4.7 trillion expenditure. So I think from a previous budget to previous years, what I'm talking about is before 2024 to now, is that there's a prioritization of expenditure, and there's what would give us the best benefit based on the goals of the government. I think that's the big change. And there's a story to be read in the budget, and there's a priorities list that's been held, and also trying to optimize resource and the factor efficiency, productivity is one of the key elements. We see abandoned buildings, 2,700 will go into private-public partnership. We see abandoned land and under-cultivated land, especially RPCs, government will take over if they are not willing to reinvest in our tea cultivation. So these are very strong statements made in the budget speech to say that every inch of this land needs to be productively used. And if somebody has taken that responsibility and not doing it, the government will have to take alternative actions to ensure that there is more productivity in the thing. And if I don't say anything about Ministry of Industries at the first round, it will be not fair. So Ministry of Industries has been always overlooked. We've got the lowest capital budget comparatively, but now with very strong proposals, our institutions coming together to be serving one entity to serve industries and entrepreneurs, and also industrialization. We need a lot of investments in the zone preparation. So there's 5 billion rupees that's been allocated this year for zone development. And I think this will set the stage for industries. I'm pretty sure the entire bucket list is not covered through this budget, but I think based on the policy book we gave for 5 years, we are progressing, and a lot of reforms that was asked by the industry we've been able to incorporate into the budget from the industrial development side.
You've been engaging about Sri Lanka state-owned enterprises, and as we know, Sri Lanka the government employs a large number of people, including in the defense forces, and about close to 1.5 million, I think, right? That also has a bearing on the level of efficiency. You know, if you can untap efficiency there, it has ripple effects across the economy. How do you think, from a broad policy perspective, will the government be approaching state-owned enterprise reforms? There is a proposal in the budget of a holding company where several, I think, private business-oriented enterprises can be put. Can you give us an overview, Deputy Minister?
Yeah, Shamil, I think this whole narrative, which most of the analysts and experts talk, is not been properly articulated. So when you say state, there are two aspects. So state services, they are not SOEs. So the majority of the workforce in the state services. And there are SOEs, especially 52 strategic SOEs that's been named in Act, and there are other SOEs. So altogether, there are so many SOEs. Some are strategically relevant. Some are, we can decide whether the government really need to be in that thing. So the government policy now is basically the strategic investments per se. We are very much keenly looking at energy, transportation, banking, and telco as 4 strategic pillars, because it's gonna create a competitive market, and it will drive the market forces to ensure that we give the lowest possible cost base for industrialization. So these 4, plus there are certain entities that has a specific role in the market to play. For example, the Litro, the State Pharmaceutical Corporation, the SATOSA, the Ports Authority, the fisheries. So there are certain roles that gaps in the market that these entities are playing. So what will happen going forward is each of these goals, whether it's profit-oriented or whether it's social-oriented, whether it's market-oriented, that will be clearly get defined next year. And then the government will ensure that the ones which are supposed to make profits and driven only on profitability, they will be put into a one basket as a portfolio management, like what happens in Temasek in Singapore. So that's the idea we have. And so there will be the policies that government will play a significant role in the identified sectors, and the government ownership will not get diluted. There will be SOEs which will go for public-private partnership, and there will be SOEs that will get wind down. So these are the 3 actions we will take based on the purpose statement of the SOE. But apart from all, the SOE Management Act will ensure SOEs will be strongly governed. There will be less political intervention. No people will be taken for letters and stuff, which has happened previously. So the SOEs will be run as a more close to a private entity.
At this point, are you able to say how this holding company will be structured? Will it be enabled by the SOE Management Act? Do you foresee separate legislation for a holding company? And also, you identified 4 strategic areas where the government wishes to maintain its commercial presence, right? Is it only those 4 areas that will be held in this holding company?
So there's no decision yet which will fall into the holding company. So, but with the SOE Management Act, this holding company will be proposed, and there will be a criteria which will come into the holding company, because then ideally that holding company should be able to manage the portfolio. So I don't personally think those strategic 4 areas will come into that. But because their entire objective with energy is government to have large stake in the energy generation, and transportation and banking, we will hold on to all 3 or 4 government banks, and probably we will look for developing another development bank as well, because we see financial market, government has to have a presence. That is our policy.
So perhaps this is a good segue to bring our next speaker in, who is Ruini Fernando. Ruini is an expert in public-private partnerships at Deloitte in Sri Lanka and the Maldives. And Ruini, may I invite you to make your presentation on the importance of PPPs and key considerations therein. Ruini Fernando from Deloitte.
So what I'm going to speak to you very briefly today is about the broader context of mobilizing and enhancing capital flows for development. I think Deputy Minister Chaturanga set the stage when he said that this is going to be a growth-oriented budget. We have seen the worst of the economic crisis behind us, and now we are getting set for a period of hopefully rapid and productive growth for the economy. So really, when you look at driving growth, I have done one slide just to show where our expenditure is going. So there is tax revenue, as Charmaine mentioned, which is now coming up to, the target is coming up to 15.3% of GDP. And we also have expenditures that we need to incur. So if you really look at the mix, the capital expenditure that is allocated in the budget amounts to about 20% or 19% of that expenditure, and the recurrent expenditure amounts to about 81%. So now in the recurrent expenditure, we also see certain elements which are not really discretionary as such. It is beyond our control because we have to incur those expenses whether we like it or not. For example, 37% of this 81% goes into interest payments, which are arising from the past debts that the government has incurred. Then we also have the state sector salaries and wages, which of course are necessary because that's an important part of the functioning of the government. But when you look at the chart on the right hand side, and you will see this in this area, I have compared here the investment that we are putting into education, health, and public investments. Now, these are three critical areas which will drive future growth, right? Because education and health being the pillars of our social system, the free education and free healthcare that we have for our citizens has been a pillar which drove our development and growth for a long time and will continue to do so. But when we compare ourselves, and these are all historical figures, now we will hopefully see improvements in these. So Sri Lanka is here in this green bar, the second line in the three buckets, and you will see a few other countries which I have compared with from the region, more developed countries as well as less developed countries than Sri Lanka. So we are not doing great when it comes to allocating expenditure or spending money on things which are important to drive growth. So in the past, both healthcare, education, and public investments, that is into infrastructure, has been below that of our peer countries. So this is, it is a reason, the reason why this has happened is because we have so many rigid payments that we are already compelled to incur, particularly interest payments. Now, hopefully, with the economy developing and our tax revenues going up, what the citizens and all of us would look forward to seeing is that greater allocations are enabled in these key sectors which will drive future development. And I think the budget speech today by the President referred to this, where particularly he emphasized on public investments being maintained at a 4% level in future. Because time and again what we have seen is when we have to meet budgetary targets, and now we have to meet IMF's primary surplus target of 2.3%, where we tend to cut expenditure is in the public investment or the capital expenditure, which goes into vital infrastructure. So most of our other expenditure is committed, we spend less on infrastructure and public investment, and then we try to meet our budget targets. But hopefully, over time, as the economy grows and the tax base grows, we should be able to manage these expenditures and drive more money into what is really important. Now, talking about public-private partnerships, I think Deputy Minister also alluded to this. This will be something that will help us now in a situation where we need to drive growth and we are really aspiring to have 7% GDP growth. The public investment component alone will not be enough. And I think in that sense, the government has made a good decision to crowd in private investment to drive this process. Because to achieve 7%, I think invariably the 4% of GDP that government is going to put in is not going to be adequate. Right? You will have to supplement it with private capital coming into the equation also. So we saw today in the budget significant capex plans, capital expenditure in healthcare, hospital upgrading, universities, medical colleges, roads, public transport improvement, which is very critical for productivity, waste management, economic zones, ports and airports, and so on, amounting to something like 1.4 trillion LKR. Now, this underspending, which this graph shows, actually the third bar is where we are looking at the capital expenditure underspend we have had in the past. We have to try and overcome that because we are looking at now a very ambitious program of capital expenditure. Now, how PPPs will help in this process is that the government will work in partnership with the private sector to achieve these investment goals. And PPPs, as we know, are possible in almost all areas of public infrastructure. And this we have seen in other countries, in neighboring countries, these models being adopted very, very successfully in everything from public transport to healthcare to even education, waste management, ICT and digital infrastructure, particularly to develop the capital assets that are needed to support these sectors. And even today, despite not even having a PPP law, Sri Lanka has been quite successful in some areas in executing good PPPs, particularly in electricity and port sector, which have the highest levels of PPP investment to date. An interesting statistic is that the terminals, the port terminals which have been developed using public-private partnership arrangements today accounts for about 69% of the shipment volumes out of the port of Colombo. So that's clearly an area which has benefited from PPP arrangements. Likewise, we also see contributing to our export income, service income amounting to about $1.4 billion US in 2024, growth of 14% from sea and air transport services. So these service sectors, I'm sure the EDB chairman will speak more of it, is also can be driven more by bringing in investment through mechanisms like PPPs. I will talk very briefly about what are the ways in which successful PPPs can be structured. Now, what is needed and hopefully what the new law and the guidelines that will follow that will bring through is the ability for the public sector and the private sector to clearly set out their responsibilities to each other when you are carrying out a PPP arrangement, because it's a partnership. It goes on for a long time, 20 to 30 years, right? So you need to agree on project specifications, quality standards, when the asset is handed back to the state, what kind of conditions, handing back conditions are there, how will investors deal with currency and interest rate volatility, particularly if you're going to attract foreign investment, then foreign investors would be worried about how volatile the currency and the interest rates are and the economic stability in the country, because their returns will be affected by those factors. And also PPPs need to be supported by good feasibility studies, environmental and social impact assessments, and the impact on the public finance. Because remember, it's a partnership. PPP does not mean that the private sector takes on everything. The government will also have public finance obligations towards these PPPs. So those have to be carefully managed to see how much they will impact the budgetary cost allocations going forward. And in the event, if there's any viability gap funding for making some of these PPPs more affordable to the public or to improve returns to investors, then those commitments will also have to be looked at by the government. So to get PPPs right, I think the law will be important, the regulations will be important, and this will hopefully create the right environment to structure PPPs in any areas, but in a manner that is kind of responsible and reasonable to both parties, the public and private sectors. So these are some of the positives we saw in this respect, in respect of enhancing investments and capital expenditure in the economy. Now, again, going on to a slightly different topic, again, Deputy Minister Chaturanga pointed this out, and I agree with you, that state-owned enterprises must be an asset. Actually, it's important that SOEs become an asset to the nation and not a problem. Now, these two charts which I have depicted here show again history, right? And these have been published by the Ministry of Finance. If you see, I think it's not very clear here, but what you see, the dips below the axis are some of the budgetary supports that had to be given to these state-owned enterprises from time to time. when they had different types of difficulties. If you look at today's budget speech also, there are two instances which I picked up, which entails the budgetary, the people's, taxpayers' money being used for certain deficits that have occurred in the state-owned enterprises. One is government guarantees and treasury commitments that have been given to banks, and where state-owned enterprises have not been able to repay the banks, and therefore the government has to step in and repay those under the government guarantees and comfort letters that have been given. Another instance is where there are 10 SOEs which have not paid their statutory dues in respect of staff. Again, government has allocated money from the budget to pay those dues on behalf of the staff. Now, these are instances which can be avoided, and which I think going forward, we need to be able to curtail from having to expend more and more money from the budget to cover up any shortfalls or deficiencies in SOEs. Rather, I think in other countries you see situations where state-owned enterprises become well-performing, highly performing, and then they begin to declare dividends. And those dividends become non-tax revenue to government. And that's a really wonderful situation to have, right? Because you can reduce the tax burden to people and go towards that 20% target that the president was speaking of, and have lots of money to spend on public investment, education, and healthcare if these SOEs start performing as we expect them to do. And Minister Chaturanga, I think we were happy to note that there were 5 SOEs which recently declared dividends, and these dividend checks were handed over to the government. We saw this in the press. So the message is that we need to transform SOEs from fiscal liabilities to strategic assets which are generating income for the state. And this can be done by aligning operations with commercial and performance-based goals, ensuring that recruitments are done in a commercially viable manner, that they are well governed and managed independently with commercial justifications, and having independent boards like was done with the state banks recently. And basically enable these state-owned enterprises even to eventually one day come into the capital market and be able to raise capital for their growth plans. I'm not talking about privatization, because the government clearly has said it will not be privatizing a lot of these critical enterprises, but using still the capital markets as maybe a source of debt raising or maybe minority equity stakes, where you can actually, they are so well governed and performing well and are independently run, that they can have the confidence and the kind of financial status that warrants them coming into the capital market and mobilizing even private capital in sort of a PPP kind of manner to drive their future growth. So these are some do's and don'ts on driving future investments. And with that, I will conclude my presentation, and I'm sure we will have many questions on this as well. Thank you.
Thank you, Rooney, for that. Focused on the panel that is here with us on stage, I overlooked introducing a member of the panel who's joining us virtually, and that is Vijay Chauhan. Vijay is Executive Director, Customs and Global Trade Advisory with Deloitte India. Thank you, Vijay, for being with us. I'll bring you into the conversation in a little while as we talk with the panel, as we take this discussion forward. Minister, you wanted to add something to the conversation at this point.
Yeah, just to add on the SOEs, there's a perception in Sri Lanka that Sri Lankan SOEs are burden to the treasury. Actually, even if you look at last 3 years, the profitability of the SOE is about more than 400 billion. But why we went into these problems, mainly because mispricing in CEB and CPC, and also as a long-standing conversation about Sri Lankan Airlines. But everything else, the portfolio has been always profitable. So we have to acknowledge that first, and also whether the government should be in business or not in certain areas is a topic that we can discuss. But in general, now last 2 budgets, the government has not put any budgeted funds to support these SOEs. And this budget, there's nothing. So basically, when you mark to market the two large corporations, CPC and CEB, and given Sri Lankan Airlines have been given a 3-year target to run with their own self-sufficiency. So likewise, the policy now is not to be a burden to the treasury. I think that is something we need to clear, and also that the public needs to understand Sri Lankan SOEs as a whole has not been a burden other than few troubled childs, that if we can make them efficient, they will make profits based on the purpose of their requirement.
I'm sure SOEs will come up in these conversations. One aspect of it is their profitability. Yeah. The other aspect is, are they operating efficiently, particularly when they are operating in areas where they have a monopoly and there is no competition. So pricing isn't very transparent. We don't know if that's the optimal pricing. But we'll get to that. Can I bring you in, Hemantha? Hemantha is Chief Executive of Nations Trust Bank, NTB. Hemantha, in general, the financial sector, the banking sector has been one of the highest taxed industries in Sri Lanka, in addition to the corporation tax, which everybody pays at 30%. You also have additionally VAT on the value addition that you do. I think the effective rate exceeds 55%.
Yes,
somewhere there, right. Now, we have this conundrum, this dilemma. We need the banking sector to provide affordable credit and make credit accessible. At the same time, the fact that you have to part with so much of your earnings as taxation makes that a difficult task. How do you think, now that some of the economy-related fundamental challenges are sorted, right? Sri Lanka is no longer in a situation where its debt needs to be restructured. That's been sorted out. How do you think going forward the banking sector will be able to contribute to the economy, and look at this in the light also of the continuingly high taxation?
Sure. Thanks, Shamindra. So let me just give some context to the question. So obviously the banking sector is regulated, and as a regulated sector, we take corporate governance and tax compliance as absolutely necessary, and we maintain the highest standards, sure, I think, as an industry. Like you said, we pay corporate tax of 30%, FinVAT of 18%, SSCL of 2.5%, so that's over 50%. There are a few others, sometimes can push it up. Again, to give some context on the numbers we are talking about, the banking sector last year, 2024 financial year, profit before tax was 692 billion. We paid a total tax of 368 billion. That's the whole industry, which leaves 324 billion after tax. Now, we of course, given the where the economy is coming back from, we obviously understand the responsibility at this point to support the fiscal and the country, and that's understood. And I think we welcome the stability in the current budget in terms of the tax rates. In terms of the overall contribution, let me also share some numbers in terms of the overall contribution to the fiscal. In 2024, the Department of Inland Revenue collected 1.9 trillion in taxes overall, the entire economy. The banking sector contributed 19% of it, so almost 20. We like to round things up. So the question is, I think in the long term, like the President stated in the budget, as we aspire for a growth rate of 7% in the medium term, how does the banking sector support that growth aspiration? And I think the banking sector is an important cog in that growth story. So two questions, I guess, from the industry's perspective. One is the equitability of a 50+% tax for industrial sector that supports economic growth. Two, in terms of that tax rate effective of 50+, is that progressive for economic growth, or is it regressive in some way? So let me just give some background to that. So the tax rate, banking profitability, and growth, there's a cause and effect kind of cycle, right? So like I said, the banking sector recorded 324 billion in profits. About 30% was distributed on average in the last few years by way of dividends. So as much as 70% of the banking industry's profits gets plowed back into the capital of the banking system, and thereby strengthening the tier 1 capital ratios of the banking system. So obviously a stronger banking system is recognized through the strength of the capital base. And it's the capital base that basically allows the banking system to support industry in terms of lending. So currently, amongst the key prudential ratios that the banking sector follows, one is the single borrow limit, the maximum amount of credit that we can grant to either a single corporate or a corporate group, an SOE, or a single lending project. So that applies, amongst other things, to large infrastructure projects, anything that we lend to. Now, 25% is a function of the bank's tier 1 ratio. So the larger the tier 1 ratio becomes, the larger our ability to lend to a particular project or to a corporate in terms of supporting growth. So the more tax we pay out, the slower that capital formation. So I think that's one aspect. Then there is also the overall capital adequacy of the banking system. I think it's fair to say that in the 2022 crisis, the financial crisis, the banking sector did reasonably well in terms of surviving in that kind of crisis. Normally, it generally flows into a banking crisis. But we were lucky that in Sri Lanka, the entire banking sector stood up strong. And that was largely because the banks were well capitalized. So I think that function of profitability, profit retention, plowing it back into capital, in building a strong banking system that's able to support economic growth through more lending, it's fundamental for the growth story of the country. So I think lastly, I think it's worth looking at from a long-term perspective, a medium to long-term perspective, what some of the peer countries are in terms of tax rates. So India is a large market, so we'll leave that out, but Bangladesh is at about 30 to 40%. Vietnam about 20%, Cambodia also 20%. So I think those are aspirations as we drive growth across the economy in the years ahead. It's probably something that is worth thinking about because it's important that the banking sector is ready and able to be able to support the growth opportunities that come along and really accelerate the growth in the economy through SMEs, mid-market corporates, and large corporates, and indeed state-owned enterprises and also infrastructure projects, which all require lots of capital.
Right, and I will go to Mangala Vijayasinghe, who is the chairman of EDB next, and if you followed the lead up to the budget speech, you would have seen from industry a big expectation was that the SWAT scheme would not be abolished, but that didn't come to pass. So, there is a question here for you, Mangala. How does the EDB plan to support exporters in managing the additional VAT compliance and cash flow impacts? And what measures are being considered to maintain Sri Lanka's competitiveness as an export destination, given the sort of challenges that the industry anticipates they will have because of SWAT?
Thank you very much. Deloitte management team inviting Export Development Board also for this post-budget discussion. Before going to your questions, I will give some brief introduction about Export Development Board in order to get some idea to the audience as well. Export Development Board is a premier organization promoting and developing export sector in Sri Lanka. So we are mainly catering the two segments, mainly for the merchandising and the service sector export also. And we fulfill the five pillars from our scope, mainly for the policy advisory role and the monitor, then the knowledge provider, promoter. So based on that, so we are trying to position Sri Lanka as a prominent export hub for exclusive product and services. So based on that, we can see right now our export value 2025 we are targeting 17.7 billion. So compare with this number, with the last year we can see the first 9 months we have reached 7% export growth, and the month of October, November, December we are targeting another 8 to 10% export growth. So that means this year will end up with the 17.2 7.7 billion market. So when you look into our export revenue, so that 3% from our national GDP, 19%, and by 2030 our plan is to reach 25% from the total GDP. Based on that target, so we have to increase our capacity development program, and we have to scale up our SME sector. So this budget we can see that very much a positive budget proposal we received. So compared with the last year, Deputy Minister correctly mentioned, we have given, EDB has been given more than 300% budget allocation compared with last year. Because that is needed, because when we are increasing our export revenue, so next year our target is to more than 20 billion. To reach the 20 billion export revenue, so we have to do a lot of promotional activities and the capacity development activities, and participate many trade fairs and all. And the next year also we are planning to have our Sri Lanka Expo 2026 after 14 years time period. So with that, there are so many other activities in the industry. So next year will be the very much potential year for the export development sector. So answering your SFAT questions, so this SFAT matter we have been discussing with the industry, many exporters forum as well. And also we discuss with the Ministry of Finance as well. Our exporters, actually, they have been using this SWAT during the last more than a decade's time period. So this SWAT was abolished by 1st April onward this year, but the new government wanted to postpone till 1st October this year. So anyway, now this has been already implemented. So then the challenge is, the SRT scheme, anyway, this is a necessary of the fiscal reforms. So as Export Development Board, as a premier organization for promoting and developing export sector in Sri Lanka, recognizes the cash flow and compliance challenges it creates for the exporters. So based on that, mitigate this risk, Export Development Board is working with the Indian Revenue Department to ensure the effectiveness of risk-based refund scheme, we call as RBRS, with proceed with the 45 days with the very much potential exporters. So when we have the discussion with the Indian Revenue Department, they mentioned that with the exporters who are coming with the proper documentation, so they are ready to give the relevant refund system within a week time period. So therefore we are expecting very much efficiency work from the IRD too. In addition to that, EDB is collaborating with the Ministry of Finance to strengthening the remit system and the support for the administrative support as well. And also in addition to that, capacity development program has been conducted with the IRD to educate exporters on existing VAT reforms. And also while we are enhancing our other activities as Export Development Board. But overall, the SFAT matter, even we are in the level of ministry, in the Ministry of Industry also, we discussed with our minister and the deputy minister as well. So we are seeing this, we are expecting a very much efficiency progress from the IRD department as well. So if we are unable to get the relevant efficiency level, so we are planning to have another progress approach with the ministerial level too. So overall, we are expecting that even today, Honorable President also mentioned in the Parliament that this SWAT scheme government also has kept more priority. We are expecting very much efficiency level from the government as well. In addition to that SWAT matter, if there are any negative impact for the export sector, as a ministerial level, we are going to involve this matter as Export Development Board. Anyway, we are responsible for the promoting and developing export sector in Sri Lanka. In addition to that, you asked about what are the other engagement EDB has taken to expand the export sector in Sri Lanka. Basically, we can see that the next year will be the very much potential year for the export sectors. We can see that even this budget has been allocated for the various activities, including infrastructure development and the capacity development program as well. So with that, we are expecting a very much high potential for the next year, 2026 budget.
Johan, let me bring you in at this point because we are discussing SWAT, and let's assume the audience understands what this challenge is, right? Now, the chairman of the EDB talked about the intention or the desirability of increasing our export revenue. We've already seen an uptick this year. What do you think will be the impact from a apparel sector point of view? What do you think will be the impact of SWAT abolition on the ability of the industry to operate at the same level of efficiency as it did previously, given the cash flow challenges? And do you think this will impact export revenue targets? Is it going to meaningfully impact it in any way, you think?
Thanks, Jamendra, for that question, and thank you to Deloitte for asking us to be here. So I think on the SFAT question, the challenge is going to be in the refund process, right? I think right now, SFAT is gone, the law is in place, and companies are due to get their refunds 45 days from the end of the tax period. So I think the challenge is going to be to make sure that that happens, and that's always been our ask, to make sure there is a system in place that is going to deliver that in. In that context, just jumping into the budget, I think the important thing there are two things. One is the talk of RAMIS 3.0. I think that acknowledgement that RAMIS the existing system is unable to cope with and needs to be overhauled. And secondly, the e-invoicing pilot, which is also talked of and allocations for that. And the apparel industry has been part of that pilot program. The initial indication is quite positive. I think it gets rolled out. I think it starts with the two pilot companies, I think, before the end of the year. So I think this is going to be key. At the end of the day, there is a large impact on the cash flow of the exporter. That's accepted. It's known. That is going to lead into, obviously, pressures on margin, pressure on cash flow. I know there's bits in the budget that talks about access to finance, particularly for SMEs. I think that's quite key to understand whether these are going to help offset some of the cash flow pressures. So I think, again, the devil will be in the detail there to see, do those schemes actually allow SMEs to get access to capital, access to funds to help this process. So it's going to put pressure on the system. There's no doubt about that. The challenge is going to be how quickly we can make sure we get the refund process working. Time on that will tell, because as we all know, the 45 days only kicks in from the end of the month following. So SVAT was removed in October. The 45 days kicks in on the 30th of November, so refunds are due the middle of January. So we're in that window now where we're going to have to kind of wait and see, and then also understand, once refunds are made, what the audit process is that goes on behind that. So a lot of unknowns and uncertainty that we don't really need, but let's see. Hopefully, if the refund mechanism works correctly, then we will minimize the impacts that has.
Very quickly, Shamin and Johan, in the past, the Inland Revenue has been very keen on an audit if there's a refund to be dealt with, do you anticipate that will be the process in the case of SWAT? I mean, we don't know till we see it, but what do you anticipate will happen?
So I think this is where the challenge is. So what the law, prior to when SFAT existed, in order to give a refund, the law required IRD to do an audit. That law has now been repealed, and the refunds can be made based on the risk-based system. The challenge is the unknown in terms of once that the first refund is made, how much checking goes on in the background? Does the IRD have the capacity to check? So I think this is the unknown bit, and this is the one that's going to that worries us.
Yeah, absolutely. So the uncertainty is in that process. You can't really compare the current refund process to that of the past, because in the past it would be a full audit. Going forward now, what they've done is they've sort of gone on this risk-based assessment where they will risk profile the companies, and based on that, they will identify how soon you are to get your refund. So that's basically it. That process, that identification process, and that checking process is what I think most exporters are concerned of, and how soon that can happen and how efficiently. Of course, the Inland Revenue Department has given us the assurance that they will do it fast and efficiently. And as Johan said, we'll have to play that waiting game where the first test to be fulfilled will be towards the end of the year. So we'll have to wait and see.
Johan, very quickly, do we know how much in terms of dollars or rupees a refund cycle will likely be? Do you have a rough ballpark there?
We do, and I missed the figure at the moment, but I think we calculated that the interest cost is something like 2 billion rupees a year. The interest cost is massive. Right. So there is a lot. It's not an insignificant number. It's a very significant number. I think it was something of the order of about 12 billion a year, 12 billion a month. I think that has to come out, something like that. The numbers are massive.
Right. Okay. Thank you for that. I'll bring in Shehani. Shehani represents the technology industry broadly as chairperson of SLASCOM. Shehani, your industry is aspiring to go towards a $5 billion income or revenue by 2030, right? You're at about $1.5 billion now?
Almost touching 2 billion.
Almost touching 2 billion, okay. When you look at, you have to then grow 150% in the next 5 years. What level of support or enabling action do you think would your industry expect from the government at this juncture? And bear in mind, there were several technology industry and generally entrepreneurship friendly proposals specifically addressing this in the budget also. But you are a practitioner, you are in it, you know what it takes to build a product or provide a service out of Sri Lanka and have to be globally competitive in doing so. What do you think the government policy and also budgetary allocations can do for you?
Yeah. Thanks, Shamindra, for that question, and thanks, Deloitte, for having me at this valuable discussion. So just to set the context, so SLASCOM is an industry chamber for knowledge and innovation industry. And also we are constantly trying to promote Sri Lanka as a global destination for technology, innovation, and competitive talent. I must say that the industry has grown rapidly over the past couple of years. So we had we had some challenges during the economic crisis and COVID, but then after that, rapidly started growing. If you take currently, like Q2 in 2025 sees a 18% growth as opposed to Q2 in 2024. So that shows how much the industry is growing. And also the industry value in terms of exports is it's a second in terms of export revenue generation for the country, second to apparels. So that also shows that we've grown continuously. I must say the budget is quite favorable to the industry. And I think it focuses a lot on digitization, equity, and transparency. and a lot of favorable proposals for the industry as well. First thing I see is, of course, the digital economy and Sri Lanka digitization strategy is going ahead full on. And that is really required for the export industry also to grow, because it's like a foundation for the export industry to grow. So first and foremost, I was really happy to hear that the digital ID is going to be implemented, and we would have the first one launched in March 2026. And adding to that, all the government payments will be through digital payments, and we are sort of working towards a cashless society. That's another important thing. And also the commitment to allocate lands and facilities to build data centers. So that is, again, something that Sri Lanka can take the lead on in the region, because Sri Lanka is a politically neutral country where we can offer data center facilities to our neighboring countries as well. So as you asked, like what we need in terms of education, so in our industry, our only asset, the only input criteria is our talent. And few years back, we had sort of a supply crisis, but now the quantity is in place. Now we are really working on the quality, or trying to increase the quality of the graduates that are produced, especially in terms of reskilling, upskilling them to cater to the ever-evolving technology trends. So again, the investment for AI and other related tech upskilling, which came up in the budget, is very favorable. But added to that, we need to work a lot on the soft skills side, because our workforce is constantly working with international partners, customers, so that confidence, soft skills, professional skills is absolutely important. So we are working a lot with the universities to build this, and this is one support we need, that everyone needs to be on board in reskilling, upskilling, in terms of soft skills and the current tech skills as well. In terms of curriculum, what we want is like the facility to rapidly change curriculum, because the tech space is something that is evolving so fast that the curriculum needs to change at that same pace. And also the academia, that we need to train the academia also at the same level. And also we need to compensate the academia adequately so that they will stay in the country. And so because we saw exodus of academia as well, so we need to work on that so that they will stay in the country as well. Another thing that will be useful is if we can hire foreign professionals on temporary basis so that they can come and train our Sri Lankan workforce. So that's, again, something that we can look at. In terms of regulatory frameworks, what we really need is a very stable policy environment with minimal changes year on year. Because this is important both for the employees as well as prospective investors. Employees, because then they will stay in the country. We can stop the migration. Again, I must say that the migration rates have come down. We were at a peak at about 3 years ago, but now it has come down, so that's a positive. But we must constantly ensure that the policy environment is stable so that the employees would stay in the country.
I'd like to welcome the Secretary to the Treasury, Dr. Harshana Suryaperuma. Thank you, Mr. Secretary, for making the time on such a busy day. Obviously, an architect of the budget just presented by the Finance Minister. I will get. We have certainly we've had a long discussion, and we'd really love to bring you in. But indulge me one more, and that is a question I have for Vijay. Vijay, can you hear me? I wonder. Vijay?
Yes, I can hear you.
Okay, fantastic. Vijay, as I said earlier, Vijay is an expert on customs and global trade. Vijay is with Deloitte India. Vijay, my question to you is, from your experience, how do indirect tax changes, example, rate changes, exemption removals, etc., influence business decisions about supply chain locations? Particularly for establishing a manufacturing base or sourcing. What might that imply for Sri Lanka's strategy and the budget? How do changes impact decisions about where businesses choose to locate their supply chain?
Having me here, and when I speak on the basis of what I've read of the budget presented this morning. And I have been working with the Sri Lankan government for the last 2 years, particularly with the Sri Lankan Customs and the Ministry of Finance, trying to kind of, develop some of the trade facilitative initiatives of the government. This budget actually has a very great focus on exports, investments, foreign investments, supply chain, and logistics. Now, they all, in some sense, tie up together. And they're pretty important in today's world. What was not said in the budget, and not surprisingly, is that we live in tumultuous times because of the tariff moves across the world. And because of those developments, both in terms of, the US particularly having tariff moves of the kind that has not been seen earlier, and a lot of other countries trying to put in place different kind of export controls. And that's reflected in a whole lot of countries trying to focus on increasing their own market access through including the free trade agreements, which Sri Lanka is as well doing. And we do find that there are a lot of emphasis on streamlining the tariff part of it. But my own experience is that tariff is one part of the deal. And where tariff comes into play, it's also relative. And the current US tariff structure as it exists, though it might not continue in the same manner if we went by what was heard or what the judges in the Supreme Court in the US spoke last evening during the oral hearing on the reciprocal tariff and the powers of the US president to actually impose these kind of tariffs. So essentially, the international trade is, or the global supply chain is up for some kind of a realignment. It is looking at trying to source goods and set up manufacturing bases or material, depending on the tariff structure, the relative benefits. But signing the FTAs by themselves are not good enough. The other thing that the international trade looks at is streamlining of the processes, particularly of the non-tariff kinds. We kept hearing about the refunds being made in time. The budget also had a couple of interesting emphasis. One was on investments, and when you get the investments, you would expect a lot of import of capital goods, etc., and the international investors would be looking at some kind of a certainty and clarity of laws. Those are the kind of things. It's also that in trade, some of them look at a heightened trust by the government, because by nature, a lot of times the regulatory agencies begin with an absence of trust, which makes it difficult for the international trade. So when we look at the budget, when we look at what else is happening in Sri Lanka, along with the larger policy and focus on the infrastructure, we read in the budget this morning that there is a lot of focus on development of the infrastructure, both at the Colombo Port and the Mandanaike International Airport, including for the development of the cargo, which is very, very important, particularly when we are talking of exports of value-added goods. So all in all, what I see is that the president in his speech rightly focused on exports, which is pretty essential for the purposes of getting foreign exchange, which is one of the important components for economic stability in the US, and the IMF has been rightly emphasizing that. The second is revenues, which comes in as you export more and the import comes in. And I'm aware, the budget explains that the customs revenues have been doing very well in US. Part of it obviously is on opening up of the imports of the automobiles in the country. So in all put together, the fact is that the global manufacturing supply chain is looking at trying to realign the same. Sri Lanka is in an advantageous position to bring some of these value addition stages into the country. It will require efforts at three levels. One is the policy, the second is the infrastructure, and the third is the administrative measures which need to assure the trade that there is a stability, and what is being implemented is exactly what I would call the benefit of the gray area in the law, and the rules actually are given to the trade. Should that happen, I think that the remarkable progress that Sri Lanka has made in last couple of years would continue. Yeah, back to you.
Thank you, Vijay. Thank you for that. To the Secretary to the Treasury, Dr. Surya Penama, thank you again for joining us. We've, as you know, we've had some time to have a conversation here, and one thing that's very clear is industry has been asking of policymakers for certainty and predictability, and I think this budget has delivered that in a sense that, you know, it hasn't changed the tax structure at all, almost, right? So there is a reasonable foundation there. Let me pose a few specific questions to you, right? And one of those is in the agreement with the IMF, the extended fund facility. Sri Lanka, we've sort of proposed a property tax by 2027, and there's been some discussions and recommendations around changing the valuation system and then to have digital databases, etc., to make this happen. Can you give us some insights about where we stand with the introduction of a property tax? We understand this is not going to take place in 2026, next year, for which the budget was presented. But I suppose we have to do all the groundwork for this in 2026 to be able to implement this in 2027.
Thank you very much once again. With the permission of the Honorable Minister, and very good evening to all of you all. One important aspect that I would like to highlight in relation to the budget, and I'll get into the approach relating to the property angle that you mentioned also. It is the confidence that the present administration has created in terms of delivery, ability to implement, grasp the complexities, and come up with solutions that addresses the needs of various segments of the society. Let it be individuals, let it be SME sector, let it be larger businesses. And the approach that the government has adopted was well received. And the testimony to that one is month on month, the achievements the government is able to make in terms of, in one angle, the revenue generation, our approach, in the present administration's approach in terms of zero tolerance for corruption, our approach in terms of restoring governance in state institutions, and provide the necessary independence with competent boards on those enterprises to deliver. As a result, what has happened is many SOEs that were not performing well have started performing. The tax base is widening. Revenue generation is getting strengthened. So why I took that approach is we need further revenue, and we need further sources of revenue also. But before getting into property level, there are many other areas that we can explore to strengthen our revenue base and generate more revenue also. When it comes to property angle, we need to have the digital databases that tells the administration what are the valuations, what are the property types, distribution, ownership structure, etc., for us to figure out when to apply a taxation if you are going to do so, and what is the best way to do that one as well. So it is in that context with the IMF engagement also, it was understood that we need to have the database in place, we need to have the information in place, we need to have an approach in place to develop a mechanism over a period of time. So there's no compulsion immediately to look at, as you very correctly said, there's no mentioning about it in the 2026 budget. So looking beyond also, it is about revenue, and it is about stabilizing the base further and creating that space for growth. So provided those key ingredients are available from all fronts, we will be able to discuss and agree a time frame to see when to introduce, if we are going to introduce. But it is acknowledged that we need to have a system to have the data. To that effect, team members of various government institutions, in one angle the valuations department, in another angle the property registration side of it, digitization push is happening, a great initiative that has started. It has achieved a lot of progress during the last 1 year also. So we will be continuing those engagements and initiatives to support this entire ecosystem. What is the point at which we need to look at it to commercialize, or rather to look at, convert it into a revenue model for government to collect revenue is yet to be decided, etc. But more important from the government's perspective is to create space for the economy to grow. In the medium term, we are targeting 7+% of GDP growth, and how to achieve that is allowing businesses to perform the best that they can perform. For example, let it be the SME sector, that's where nearly 80 billion rupees worth of financing facilities are provided for them to grow, contribute into the economy, and go beyond the borders of Sri Lanka. For larger businesses, based on the approach that Sri Lanka has taken, it has driven the cost of doing business lower, allowing them to compete better and to enter into other markets as well. I'll give one example as a testimony, which I mentioned in another forum a little earlier today also. The way the business confidence is demonstrated through the pricing for wind energy from $8.26 to 3.77. The technology did not evolve to bring down the price to that extent. It is the premium that they had to pay for uncertainty, for corruption and various other engagements that has come down, which has given the confidence to the businesses to quote a lower premium when they are going to supply utilities to the government. So we want to continue on that approach, give the confidence to businesses to do better and maintain that consistency, maintain the level of transparency, creating that level playing field. Whether you are a local investor or an overseas investor, there's an opportunity. Government won't be able to do all the investments on their own. We need other participants to enter from the private sector locally, international investors, FDI to come into play. So it is the collective ecosystem that will help the country to move into the next level. I think the ground is very well set now. We are very confident the approaches that we have taken, and it's going to deliver better results 26 and beyond also. Thank you.
Let me also ask a slightly broader question of you, Secretary, and that is, I mean, this outturn of the 2025 budget has been very encouraging. It's Sri Lanka has, as a habit, almost missed the revenue target by a long mile, double digits usually. And now we have a situation where it looks like Sri Lanka, the government will easily exceed the 2025 revenue target. I'm going back to the presentation Charmaine made a little while ago, and she compared, she highlighted how vehicle import taxes were a significant part of the revenue in 2025 so far, and it continues to, I suppose, be important in 2026 for the government then to reach its targets. How confident are you, though, about the robustness of demand for motor vehicles in 2026, that it will remain in the same levels or higher levels to be able to meet this target. I ask this of you because, I mean, you would have wrestled with these questions as you made the assumptions for the budget.
How we look at it is, what are the various avenues to generate revenue? So motor vehicle importation is one of those revenue sources. It is not the only sources. So our approach is to diversify the sources that we have and support the businesses, the taxpayers on those various sources, for them to be bigger, better, and more profitable. It allows us to collect more revenue. When they are more profitable, they'll be able to contribute better to the economic development of the country. When SOEs are doing better, they'll be able to contribute better to the treasury in terms of their contribution, either through levies or through dividends. So our approach is not tilted only towards relying on the motor vehicles. Obviously, it was a significant source. We believe a significant level of demand will prevail in the next year as well. And we acknowledge the pent-up demand that we had would have played a role in 25, but we are very well prepared in terms of supporting other segments of the economy for them to come up. The importation of vehicles has acted as an input to some of the business segments to grow as well. If you look at tourism sector, some of the industries, they were waiting to bring down the vehicles for them to expand their businesses. So we expect this will now contribute to economic expansion of the economic activities that they were engaging in the past, allowing us to generate more revenue. At the same time, we are supporting, as I mentioned, to the SME sector in one angle, larger businesses in the other angle, and to give confidence by bringing in the Investment Protection Act. That is to entice investors, particularly overseas investors, that once they make investments, government will not haphazardly come and acquire those investments, those properties, and they are being left helpless to go to engage with legal battles. So this is the approach that we are taking, looking at different segments and different approaches. One angle for revenue, on another angle for forex inflow, countries getting ready. We have paid significant amount of debt during 24, 25. From the amount that we have paid in 25 to the amount that we need to pay in 28, it's about 800 million plus or minus in USD. So I think we are very well prepared, both in terms of revenue sources and in terms of inflows into the economy. These will drive wide economic activities that will boost the revenue from different sources. So that's kind of our approach, and we will continue to support various segments of the economy, including importation of motor vehicles, opening up the market wherever possible, and supporting. There are motor vehicle assembling companies in Sri Lanka, input approaches to support allowing businesses to increase their competitiveness by giving some impetus through their for their business process inputs. So there are different angles that we look at, so I'm sure those will yield results in the years to come. Thank you.
Right. Indulge me one more question, since we are talking about motor vehicles. As you can imagine, there is, in the questions that I'm getting from the online audience, there's a lot of interest about this particular subject, and we've noticed that we've expanded, or we've added an additional band of customs duty, 30% band. At this point, are you able to tell us what goods will fall into this 30% band, and are there categories of motor vehicles that will also fall into that 30% band?
I would approach it this way. This particular exercise is to harmonize ourselves with the region, with the global approaches as to how duties are being charged and doing away with the para-tariff, because we want to integrate Sri Lanka to the global markets. We want our exporters to go out and showcase themselves. Similarly, we want the technological developments and advancements of other countries to enter into Sri Lanka to support our businesses and entrepreneurs as well. So in that direction, From 3-band tariff, we are moving into 4-band tariff. Some of those items may reduce and some of the items may shift into the 30% higher band. We consider it as a revenue neutral, more or less, so it is not targeting generating of revenue, but is to harmonize ourselves since we are entering a space to be more integrated better with the global economy. That's where a dedicated committee has been set up through the approval of the cabinet, where existing trade agreements are to be reviewed to see what are the potential, what are the areas that we have not explored, but at the same time explore new opportunities to see what are the other markets that we can enter, what are the markets with good potentials based on the capacities and the structures that we have in Sri Lanka. So we will be looking at all those fronts, and some detailed studies will be done. Some work has already been done relating to what are those HS codes that is coming towards the zero side, or some of them that are getting pushed into the 30% side. We don't, as I mentioned, it's the revenue neutral activity, so we don't see major disruptions to the existing ecosystem surrounding the tariffs.
I'll pose a question to the two of you, to the Deputy Minister and to the Secretary. You mentioned, and the President and the Finance Minister mentioned the need for more trade agreements, right? And also look at the ones we have currently. We have one with Singapore, we have one with Thailand, which aren't fully operational. What is the likely strategy going forward? Do you have a sense about the sorts of regional blocks or bilateral agreements that we will seek out? And the second part to that question is, how do you relate that back to the para-tariffs we have? As the President has undertaken to sort of eliminate or reduce the para-tariffs, and some steps have been taken already. Can you relate that to integrating Sri Lanka with global supply chains and through trade agreements?
Yeah, Shamil, I'll add to this. Maybe the Secretary can go into the details. Now, for us, a small country to grow, the most important thing is how far you integrate with the regional economy. Now, if you really take Sri Lanka, we have the East Asia and Indian markets as one of our key markets to grow with. So, but at this point, we are not directly connected through trade agreements, not only bilateral. I think we will have to now look at multilateral as well. So, the Australia and the East Asia is ready to get us on board as long as we do our homework. So, I think that is where the para-tariff discussion is coming through. And from Ministry of Industries, we are very much educating our industries that the window is closing, so your productivity is the key. And how do you really help them in transformation and be productive? So we keep telling the industrialists there is no local market anymore. So if even you are producing for local consumption, you are actually competing with the imported item. So basically there is no difference now with whatever you produce, it has to be globally competitive. And that is where the goal is at. Because if you really take Sri Lanka, within 2 hours of a flight, we have about 3.4 billion population to serve. So I think that is where we are looking at as a government. So I think from the Ministry of Trade and on the taxes and the trade agreements, next 2 years we would see Sri Lanka getting into a stronger collaboration with the region, because we already have good ties with Europe. We have the GSP extending, and we manage with the US. And I think the other market that if you have to look at is China. So I think, but before that, we have to get the region on board. So that's where the small countries has great potential.
ST, any thoughts on para-tariffs? Any timetable that you're looking at broadly?
Adding on and building on what the Honorable Minister mentioned, it is about assisting our manufacturers, our industries to go out of Sri Lanka. So we need to showcase to the world that we are enabling our environment in parallel and in unison to the rest of the countries, either in the region or in the blocks that we want to enter. our structures are acceptable to them. So in that direction, that is why the approach to move from 3-band to 4-band has started. And in terms of timeline, there's no final date per se, but we have some idea. We will be the work has already been started, but when actually to be implemented, it will be after the first quarter next year. But from now onwards, some work has to be done, so the final implementation date will be dependent on that.
Great. Mangala Vijayasinghe, you had a comment to make about the points here discussed.
In addition to Minister and our Honorable Secretary, I also can give some input for the new agreement as well. Now our export strategy is to market diversification. So you know that mainly we export into the 25% to the USA market, and another more than 20-25% go to the European market. So our export diversification strategy, because while we are expanding our market presences in the USA and the European market, so we are trying to diversify to the African region as well as Middle East region and the ASEAN countries. So then based on that, we are also focusing to have a trade agreement with those countries. So we have already given our input to the Ministry of Commerce as well, to target in those countries to have a very much potential agreement with them. So right now we are having the 2 agreement with in the Sri Lanka, and the Sri Lanka Pakistan, and Sri Lanka Singapore, and Sri Lanka Thailand is on the way. But I think we have to take some time to go to the FTAs, because there are so many things to be discussed. But rather than going to the FTAs, product-based agreement we can target in the potential countries.
Right.
That's already we have given our comments to the Ministry of Finance as well as Ministry of Commerce as well. They are working on that.
Right. I will bring Charmaine into a question where I think ST and both the Deputy Minister can also contribute to. But this is a question that came online at present. The average taxpayer finds it a little challenging to file returns online, and now it is the only way to file returns, and that has to be done outright. A huge issue for taxpayers who have been used to filing returns manually, which this questioner suggests is a little unfair, which should be made optional, at least for individuals, they suggest. No changes, though, were announced in this regard. Can I start with you, Charmaine? But I will ask ST to comment about it.
President's speech.
Yes, you're right.
We gave that.
The returns have to be filed online, and that applies to individuals as well as corporates. Now, I mean, you have to look at it in this aspect. Individuals, you get, let's say, broadly 2 categories, the senior citizens and the non-senior citizens. Senior citizens, yes, I can understand they may have some challenges filing, using digital-based platforms and filing returns online. And that is why the last year, the proposals in February had a proposal to say that for senior citizens, it would be made optional. And I think it will come in when the amending legislation is brought in. But for the rest of the people, in an era where we speak of digitization, electronic cards, EIDs, AI, and so on, I think the argument for not filing online is a little weak. And in any other country, it's the same. So it's not about whether you should file it online or manually. Perhaps the more relevant question is whether it's a little complicated. And there again, the Inland Revenue has actually, this time around, sort of had several formats where if you are a person with a simpler source of income, you have a 1-page return to file. So they've moved towards that simplicity. But it's also a mindset frame that you can't, do things as you always have done in the past. As technology moves and as technology improves, we have to go with that. And that needs to be done to for the entire framework to be efficient. So granted, non-citizens, maybe the option should be there, but for the rest, I think a digital online filing is okay. But yes, a simpler format, and which is what the department is moving towards, and maybe that needs to be improved a little bit. There are little gaps there. There are a few bugs that need to be addressed. But once that's done, it shouldn't be an issue. If you have complicated sources of income, just like if you are ill, you would go to a doctor, then at that time you do need to go to a specialist. But on average, that is how it should be.
ST, I mean, before you came, there was a conversation here also that revolved around the statements the finance minister made about integrating at invoice level, integrating large corporations with RAMIS. I think pilot projects are already underway in that sense, right? But it was also thought that, RAMIS is due a big upgrade, a RAMIS 3.0 virtually, right? Can you talk to us about what is likely to happen in 2026 with RAMIS and with kind of almost invoice level integration into the system? And what is in store for, what are those big changes in RAMIS, which is the technology system that the Inland Revenue Department uses, that will then come thereafter also?
I think to build on, based on whether it is a question of simplicity or complexity rather than whether it is online or paper-based filing returns, yes, there are still some space to improve, but IRD has already introduced a simplified form, as you mentioned, which makes it much easier for individuals with single source of income, for example, to file their returns. Obviously, if there are complicated or rather different sources of income that you have, then obviously you might have to go through the little detail form to submit your details. And if you have even complicated affairs, that's where institutions like Deloitte can help, and many other advisors who can facilitate and support them. Into the corporate side, that's where, since the abolishment of or doing away with the SWAT system, to make sure there is seamless integration and least amount of time is taken to provide the refund on VAT refunds. The government has embarked on a engagement to introduce digital invoicing leading up to e-invoicing. It will be introduced in 3 stages. Phase 1 is for the corporates who are into export segment. The system is ready and it's getting tested as of now. And we believe before end of the year, it will be rolled out for those large businesses, particularly to exporters, to make use of digital invoicing. So that is end-to-end seamless integration. When you raise an invoice, the systems will communicate to each other. To businesses who have their enterprise solutions, they can continue to use them through API systems. It will talk to the IRD system. For businesses who don't have complex systems, there will be an interface, web-based interface, for them to communicate with their suppliers to whom they supply, and with the IRD also. That is phase 1. Phase that we believe, we are expecting everything is in place and it is progressing very well as we plan to go live before end of this year. And for the second phase is for all VAT registered businesses. They will be also onboarded and connected through the same platform where businesses are connected to each other. So invoicing, once the moment they invoice, it will get updated in the systems, and both input and output VAT will get updated. So it will take 0 time for reconciliation. So the manual reconciliation will be done away with basically. So all these system advancements, improvements that we are making is to make sure system is efficient. It takes lesser time to process, and the quality time of government officials, state officials, will be used for other areas to add value within the system. And the third phase in that journey, phase 1 is for SWAT, businesses who are engaged in exports. Phase 2 is for VAT registered suppliers. Phase 3 is for all other businesses where using POS. If you don't have a system, a POS machine, either the technologies are well advanced, well developed now, very matured. So there are very simple systems, mobile-based systems are available. Otherwise, there will be POS machines available, or you can use a general interface based on online solutions that are available. So the system that we are implementing, RAMIS that you asked, system is capable of integrating these new solutions. It is with RAMIS that we are doing the phase 1 as well, which has been tested very successfully as we speak. So we believe these improvements into the system will reduce the time for compliance purposes, will reduce the time for businesses to get their returns if there are any, refunds if there are any, and it will reduce the time for businesses to submit their returns as well, because part of them is pre-built into the system. Instead of the buyer entering, when the seller supplying, it would have been captured in the system already. So the rest of the world has moved already in this direction. Sri Lanka was little behind. Our ambition is to upgrade our systems so we are in par with rest of the economies that are growing, who are ambitious like Sri Lanka as well.
Any other changes do you think the RAMIS system has to undergo in the next 1 year that are crucially important?
We are looking at, always we are open for options. So how we look at is to minimize disruption, item number 1, disturbance, to minimize any disturbance to the existing ecosystem, but to make sure our systems, we can innovate on top of the existing systems, we can bring new technology on top of the existing systems. So we are working with the existing vendors, suppliers, our partners to understand what is available out there, what is possible, what are the advancements and improvements out there in the world in relation to these spaces. So we are looking at all options to see and select with the input of experts. There's a separate ministry task with these digital affairs, so they are engaged in the thick of it to advise us, to support us, to understand, demystify whatever the challenges or areas that we might have not understood in the past, etc. So the experts are looking into it. That's very important. So we will rely on their advice and input to choose the best way forward.
One question from the audience we have, and if I can address it to you, ST, can you elaborate on the proposed amendments to the SDP Act, which is the Strategic Development Projects Act?
A very interesting area, I suppose. Thank you very much for raising that question. SDP Act in the past has been used to pamper, to use it as a payback to some of the parties involved. Those are the allegations out there. As state officials, how we look at this, do we have a rule-based system that creates the confidence among the business community, that creates confidence and trust amongst the investors, who have lower cost of capital to enter into Sri Lanka. So when we have rule-based systems, that is where SDP is very handy. So the improvements into the existing SDP system, which is instead of discretionary, it will be more towards rule-based, it will be transparent, creates equal footing for operators in the operating in those spaces. So the advancements is to simplify what we have. Because of the framework that we are currently going through, some of the because of some of the challenges, there may not be significant advancement in terms of tax breaks per se, but it will be more structured. It will be value generating to the country instead of selected few individuals. So those are the approaches that we have looked at to remodify or to introduce some advancements or improvements into the existing SDP Act. It is the same approach that we took for the port city changes as well into the legislation relating to the port city, both to the primary developers as well as to the secondary APIs. Allow them a rule-based approach, value-driven approach, corresponding to the investment amount, corresponding to the employment opportunities that they create. So same will be applicable for the SDP as well. I'm sure details will be available shortly.
Sharmin, do you have any questions you'd like to pose to the Deputy Minister or the ST?
Actually, I think, this is again a question from the public, and I'd like to address it to Deputy Minister. The perception out there is that with the reduction in the exemptions afforded to the secondary businesses of strategic importance within the port city, that we may see a reduction in the investment or the interest in the investment into the port city. Do you feel that that may happen, or do we have a plan to sort of address that?
I think in the first place, there was no reduction or removal. It was a 2-year startup window, and that ended. So the new one is well thought through and given, as the Secretary said, it's a clear visual of, who will get what. And I think the primary investments, there's a clear 15-year holiday and a 10-year and a 5-year. And For the rest of them, it's a 7.5 reduction one. So what's really important is that I think what was in the port city last time I visited, the requirement was this investor visa. Right now it's also in. So actually 51% of that entire property is residential, 24% is commercial. And it's about how we position this now. It's not only about the incentive per se, because the value is quite visible. Sri Lanka is a politically neutral country. The potential and the capabilities are huge. And I think with the right strategies, the team is extremely confident that with this package, which was well thought through by the Commission, they can market it within next few years. So already 6 plots has been taken, and there are 5 leads. So they were very confident, and we are very, as a government, we are very confident with the new framework, we can push this through.
Can I also bring in Shehani here? One of the major investors in the port city recently has been the technology sector, and what do you think will be the impact of the changes in the secondary business of strategic importance rules?
So as an industry, we were actively promoting Port City because of the incentives that it offered. So because of the change which came about, undoubtedly it caused a little bit of concern. But what I would really hope is that at least what is there now, that it will continue without any more changes to the policy. Because see, when we encourage people to come and set up, that stable policy environment is really important, especially in the eyes of foreign investors.
Great. This question has come up a couple of times. I think I will be remiss if I don't address it, and that is to you, Deputy Minister. Does the government have a plan to reduce the labor force to levels comparable with our peers in the region of lower middle income?
Labor force? So,
the government labor force.
Right, okay. So I think we first had to admit where we are, because it's been bloated up, not in the levels of executives and skilled labor.
Right.
Mostly it's bloated up at the bottom tier. So because previously governments wanted to give jobs to the people who voted them, so which has stopped for sure for the last year, and which will never happen again. So now the problem is they also, what we are trying to do is resizing and bringing technology so that we could make things efficient. So, but the current 75,000 recruitments are for very specific required skill, like nurses, the teachers, and the technical staff, and the engineers. So the rest of it, if you take the military, it will tail off, because the majority which were hired during 2006, 7, and 8, or 7, 8, and 9, they are completing their 20 years. They will come out of that military workforce, and which now we are trying to see how do we upskill them and integrate them into the industry entrepreneurship. We have started a program as well. But the others, I think we will not recruit. We will frozen the unrequired. The other piece is that there will be certain places where the VSR, voluntary retirement schemes, will come. But no redundancy will take place at this moment, because their livelihoods are also made out of how they do. But I think with the technology coming into each of the institutions, the right sizing will happen over a period of time, I would say 3 to 5 years.
Right. There's a couple of questions about the proposed wage hike in the estate sector, SD. First is a clarification. Is the now there's a 200 rupees plus a 200 rupees. Are both those components linked to productivity? Number one, and what is the long-term play that the government then anticipates to make? Is this an annual recurrent portion of the budget that's going to be committed to the estate? How to the estates? These are private sector companies. How does one get out of this, if at all?
I would start from the long-term angle of that one. We want businesses of this country to come to a level that they are able to pay a wage that is decent enough for the workers who are engaging in those industries. That's how we want to look at it. So capacities of those industries have to be built over a period of time so they are able to pay that amount of salaries to the staff. In that journey, government will support them in consultation with obviously the stakeholders of the industry. So initially from the 1350 to 200, 1550, put another 200 on top of it, that is 1750. In that journey, it is expected that businesses will absorb the 200 into the payroll side of it, and it will be an attendance-based angle for the 200 rupees that is provided. Obviously, it will have a productivity element also. I'm sure details will be worked out very soon. It will be agreed with the industry and the stakeholders. So our expectation is within a short period of time or in the medium term, these will be built into the salary components packages or wage packages into the estate sector workers. But in that transition period, there's some flexibility offered from the 1350 now to absorb the 200 by the entities, by the businesses to make it 1550. With the input of the government, now the 200 is given to support as an incentive for attendance purposes, but in the recipient hand, it will be 1750 altogether. Our expectation, as I mentioned, is these businesses, those enterprises to be profitable and be able to afford a decent wage for those segments employed in the industries. And I need to acknowledge the support in this process. The plantation sector is one, obviously. The JAF is here, apparel sector, the EDB chairman is here, banking sector representatives are here. It is the collective support from all these segments that has made it possible for Sri Lanka to reach where we are today. So we need to acknowledge the support and the confidence from all those segments. It is the same hand that we extend to the plantation sector also. We want to support them wherever possible to the plantation sector and to the other segments in the economy as well. And we want to ensure those businesses upgrade into a level that they'll be able to pay a very decent wage commensurate with today's context.
One final question, ST, if you indulge us. This is from the audience. Lowering the VAT threshold without lowering the VAT percentage or the rate, how effective will it be?
We can see when people use some people use different techniques and tactics to stay outside the VAT framework, even though they collect the VAT from the consumer. That is not remitted to the IRD, which is the rightful thing to do. How we are doing it is facilitating and inviting them also to come into the framework. When somebody is having 100 million, they divide the business into two, bill it at 50-50 each, and they try to stay under the 60 million threshold. Now, by bringing it down to 36, so the lower ranges, the expectation is people who were, or the businesses who were at the border nearing 60 and above, will now be able to easily comply with the system. And at the same time, we are facilitating as digitization is a key component in this journey. We want to connect many businesses, phase 3 implementation. Our expectation is in 2026, the SWAT community, then the VAT registered businesses, and the last component is the rest of the businesses in Sri Lanka. So when that integration happens, it will be seamlessly, we will be able to identify those businesses based on the thresholds and be able to collect with much ease without much of a burden to the business. Because the consumer anyway pays this amount to the business. It is not a discount that the business, if they are not paying VAT, that they offer to the consumer, they are collecting the price anyway. So consumer has paid the price, consumer has paid the component of VAT. It will be then it will be appropriate for government to have a mechanism to collect that VAT. So that's the kind of approach that we have looked at. I'm sure transitional assistance will need to be given to some of these businesses. So government will look at all those options when we are going ahead with the implementation.
Okay, I think we are. Do you have any questions you want to pose, Wesley? Okay, so I think we are slightly over time here also. So I will still go for one round with everybody, and I will ask everybody to make sure their answers are like no more than a minute. I'll ask you two questions. First, listening to the budget today, what makes you most hopeful? And I'll have to start with you, Hemant, on this, right? I'll start with you and go this way. What are you most hopeful for? What is that proposal or policy that caught your eye and you think this is great for the future? And the second part of the question is, what do you think is going to be challenging, either in terms of implementation or it can be a missed opportunity? If there's a missed opportunity in the budget, what is that? So two components to the question: what makes you hopeful, and what do you think if there's a missed opportunity, or if there's some challenge you think in implementation, what is that? Take a minute or so.
Yeah. So in terms of what makes us hopeful as a sector, and also when I say sector, it's all our clients whom we deal with, mainly the corporates and the businesses. I think the policy consistency in terms of the tax regime is something that gives us a lot of hope, because I think that certainty was something that businesses were looking for in terms of investing. So that's one. In terms of, I think the second one was the challenges.
Challenge
right?
or missed opportunity.
Yeah, I think broad basing is something that all of us, the large industries, the formal sector has been pushing for, but that's also something that will probably be challenging. And I think we, as a banking sector, we've been pushing for it. We've been pushing for digitization, taking cash out of the economy. That's something we've consistently been promoting. I think we need to work hard at it. So these are systems that have been placed for a long time, and it will probably be a lot of work by everyone, the authorities, the government, and also sectors like the banking industry to make sure that it happens.
Mangala Vijayasinghe, very quickly, sir.
So this budget proposal, our National Export Development Plan has taken as a priority, so that is very much important. And also we are working with a very much ambitious target for the year 2026, more than 20 billion export revenue. I think this budget, reasonable budget, has been allocated for the relevant development activities for the first time in the history. And also for the next time, as I mentioned you earlier, for that 2026 will be one of the export expansion, including Sri Lanka Expo 2026. Those are very much important. And also allocating 2.5 billion for the trade national single window, which we are expecting many years. So that will simplify our export process as well. Those are the positive trends, including our many budget allocation for the SME sector, also very much positive trend we are expecting this year.
Yeah, I would say most positive is the focus on digitization and also investment-friendly policies like the virtual special economic zone, as well as facilitating the single window system. But I wouldn't say missed opportunity, but I would say what we need to focus on is promoting Sri Lanka as a destination for IT. So actively marketing and putting focus on promoting Sri Lanka as a destination for IT services.
I will come to the Minister and ST at the end. I think we owe them the last words. Can I come to you, Charmaine?
Yeah, I think I echo Hemant's sentiments that for me it's the consistency in policy in terms of the taxes. So that's the positive for me. But the challenge I felt was, I felt perhaps we could have maybe postponed the abolishing of the SVAT until after we had in place this whole e-invoicing and the upgrading of the RAMIS system to 3.0 and having that whole POS system in place. It would have made it so much more easier and given more confidence to the exporters. But I think we're getting there, but that, if at all, is the negative that I see. But other than that, the positive is that policy consistency.
Ruini, if I can bring you in.
Yes. Basically, Shamindra, I see two very positive things in this budget. We see now that the public financial management discipline has been set in place. So the government is really looking at managing its fiscal policy and the fiscal numbers within certain parameters. Those parameters are clearly laid out. The Public Financial Management Act has brought in the discipline needed to manage the taxpayers' money much more effectively. That's a good thing. There are also very ambitious reforms that are going to happen. The challenges I see is that when you are implementing something new and reforms are happening, there is a need to convince all the stakeholders about what benefits these reforms will bring. And reforms can also lead to uncertainty, and it can lead to certain maybe initial pain as well to certain segments of society or people or communities. So there is a need to create a lot more awareness about the long-term benefits of these reforms and to carry everyone and the public through with what the benefits that the reforms will bring. So that awareness creation is quite critical and a challenge the government will have to do.
Johan, please.
Thanks. So I think for us, the positives, certainly the focus on market access on FTAs, that's absolutely critical. The digitalization is probably the one big thing. I think that's a real winner there. I think there's a lot that's happening. We talked briefly on the invoicing, on RAMIS, and the whole digitalization piece, I think, is one of the other big one that's going to help bring structure into it. I think there are probably two things we need to be mindful of. One is there will be resistance to digitalization, particularly in certain government departments. As you try to push this further down, there is going to be resistance, and we've seen that already, and I think that's something we're going to have to face with. The other one I'd like really just to take a rethink on is whether we're really doing enough to encourage new investment. One of the challenges we've always flagged up is that we've done away with the preferential rate of income tax for exporters. The current rate is higher than all of our competitors offer. So I think if we want to really encourage new companies to come in, existing companies to grow, we are going to have to offer some incentive. The capital allowance thing goes part of that way, but I think really we want to find a package that is really going to make Sri Lanka the preferred choice of an investment decision. So I think that's the challenge we all face.
ST, you have the unenviable challenge of having to deliver on the numbers that are proposed. I mean, if there is one person who has delivered it as in the bureaucracy, it would be you. When you look at the challenge you have in 2026 and beyond in the framework that you are now created, what do you think are the one or two most difficult things for you to control in your pursuit of achieving these forecast numbers are? If on the flip side, what do you think are the ones that also are fairly straightforward, easy to achieve? Are there deficit targets, revenue targets that, or certain taxes that you think are virtually a done deal, and which ones are going to challenge you think, and your team in the future?
The first angle is the global challenges that are beyond our control. It is, in some areas, it will be volatile. Sometimes these tariff engagements, sometimes there can be uncertainties given instability in certain regions, etc. Except for that, I think we have created a solid base, and we are very positive, and we are on a very good footing. The cash reserves of the Treasury has been historically high. That is because the financial discipline that we have introduced, not just their rules on the book, but what we practice in terms of implementation also, and supporting our team members to build the capacity to understand the need as well as to deliver these reforms that the country is going through. So based on those, we are quite confident that we will be able to continue the journey in order to make sure that we are connected to these reforms, these improvements. That's where the digitization comes very handy. If you look at some of the items that we introduced, or the Honorable President mentioned today, payments below 5,000, the government will absorb the cost for QR-related payments. All government agencies will be digitally enabled to accept payments, e-payments. Not only that, government will absorb the cost of those payments as well, card-related payments. Budget lines are already provided and allocated. This shows the commitment from the government to pursue in the digital direction. UDI will be a reality. Third quarter, the first ID is expected to be issued. So your presence digitally will be recognized and facilitated. So if you look at all that ecosystem that is evolving, the future is going to be different. We have to think outside the box, but we have to be monitoring them very carefully, supporting them where necessary also. So the government system is ready for that, ready to engage and to take on that task as well. We are well resourced and we are blessed with the partners with whom we have worked, both international, at G2G level, multilateral agencies, and obviously investors, local businesses, taxpayers, our income taxpayers, corporate taxpayers. So once again, we appreciate the support and understanding extended by everyone that this country has to move forward, and we really value your support in that journey. Thank you.
Let me just ask you one final question, which perhaps you can give us a very short answer to. One of the challenges you inherited was the high component of interest payments versus the government's revenue. It's like in the region of 40% in 2025, right? What do you anticipate the government can achieve in 2026 with regards to the interest payment? This is both a matter of a rate and how much the interest rates in the country, and also how much of that debt you can set off net. There's been some settlement of debt also in 2025. What is your strategy forward?
So it is not a haphazard approach. There's a medium-term debt management strategy for the government which is in play, and it is a very carefully curated, crafted strategy with the input of experts both locally and globally to ensure what is the best mix. Instead of having to borrow to finance short-term requirements, we are looking at long-term, how to create that stability that gives the predictability for government's financing requirements also. So in terms of our medium-term debt management strategy, we are confident we will be able to taper, or the amount that is allocated for interest payments will go down gradually due to two reasons. One is our debt management strategy. As a result, we are moving into long-term borrowing at a lower rates and taking away the risk of shocks of volatility in the market, and at the same time increasing or supporting the GDP growth. So as a result, the percentage, associated percentage will be lower. And I'm sure the resources at disposal and the expertise at disposal and the commitment of state officials, I need to recognize them as well. The combination of them with the support of business community, we should be able to deliver as a nation.
Deputy Minister, the final words to you. Again, when you look at the budget, I will come to that original question. What makes you hopeful? And every plan has challenges or difficult areas to implement. What do you think those are?
Yeah, I think the positive is, I would speak as a citizen. I have been following and I have not seen this level of financial discipline in this country. And so if we stick to the ground rules with the discipline, and especially the difference now is that we trust the government officials. And we respect government officials. Their collective knowledge is what the wisdom is, what the ministers are driving the change with. So I think with that change, we feel that it's very possible to deliver 2026 budget. And I think the challenge would be on the capital expenditure, because all these initiatives some are very huge, some are transformative, and getting it through 1 year is a very big challenge. So I think what we really need now is the people support, because we've been delivering what we promised over the last year, and we will continue to deliver, but we need the wholehearted support. There were doubts about this government, there were doubts about our policies, there were doubts about whether we will have the capacity and the bandwidth to deliver. So we've put our head down, and all together, including the president, the cabinet, and the officials that we appointed, and especially the chairmen of different institutions, they've given their fullest. And I think if the public can give their fullest, I think these are not big changes, and we could even aim for a 300 billion economy very soon. So I think the final thought is that we are predictable, it's in writing, it can be reviewed, and there's a huge political will for this change. And that needs to be supported with the citizens and also international communities on board. Every country is very supportive at this point. And for Deloitte and the researchers, I think now it's a good point to do a research on cost of corruption. So what was before, what was now, I think it's an ideal time to do that calculation and see how a disciplined, anti-corrupt driven government can reduce cost of doing business, because that is a huge gap we had. Any investor who came in, even a bilateral country who came to fund us, had to face a lot of difficulties. And now the officials are, the investors are rooted to the process and not driven by interest of ministers and politics. So I think this is a huge transformation in Sri Lanka, and we are only stepping into the second year of a big transformation.
Right. With those thoughts, Deputy Minister Abhay Singh, ST, Dr. Surya Peruma, my panel, if I had an audience, I would ask for a round of applause, but you certainly do deserve a round of applause. Fantastic conversation. Thank you very much. And with that, we close the evening's proceedings. Thank you for indulging us. Thank you for staying with us. We are certainly over time. I hope this panel managed to sharpen your insights about what to expect in 2026. Thank you very much, and good night.